It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
It's the Real Estate Breakfast across Australia, talking all about your property news and what is likely to affect us in 2026. And we are streaming from Bundaberg to the suburb of Chatswood in Sydney. And good morning to wherever in Australia you might be. It is a Thursday, January the 22nd. And towards the end of last year, we were talking about hoping that there wouldn't be any world shocks to the market that might affect the real estate property market. Well, yesterday in Davos, located in the eastern Swiss Alps where world leaders gathered, the temperature, it rose very quickly. And one blunt line summed it up, which said, dealing with Donald Trump is like dealing with a T-Rex. You either align with him or get eaten. Even before he's arrived, leaders were openly nervous. Europeans talked about independence. Macron warned about a return to raw power politics. And Canada cautioned against going along to get along. The rules-based order, they said, is under real strain and everyone's bracing for impact. I mean, it's pretty heavy stuff. Trump is arriving today, and there's going to be fireworks, no question. And are we on the verge of something so unimaginable in terms of the global world order that we just can't fully appreciate what is about to happen? Well, time is going to tell us very quickly. And talking of time, the time tunnel is back in just a moment. Yes, with more interviews. This is the summer series on the way after this.
You're listening to the Summer Series on the Real Estate Podcast.
So I grew up in a very real estate focused household. My mum was a tax accountant and my dad used to buy and sell real estate after buying and selling cars. So buying and selling was something that I'd seen for a lot of my life. The home that I grew up in, we renovated it and sold it. And that's where I saw my first real estate process roll out. And from there, sitting in the audience, watching how an auction works, I was hooked by the dopamine of it, I think. I was so intrigued by buyer behavior and how people respond under pressure. And my dad and I used to watch auctions every Saturday. So from about 8 or 9 years old, from there, I knew I really wanted to be a part of it. And that's how I've landed where I am today.
That is a front row seat on the action of what is going on, not dissimilar to me because I'm not a real estate agent. Yes, I bought my first property when I was 19. I've traded in property all my life. I know property inside out. But sitting here doing what I've been doing over the last handful of years, my goodness me, I mean, I have learnt so much. How can you not? And the same thing, you got hooked.
I got absolutely hooked. There's so many peaks and troughs to buying and selling. And, you know, the thing about it is it's not because of all the emotions that play into it and all the money stakes, you know, I suppose front of mind when you're buying and selling, it's really money, right? Money and emotion. It's just that there's never been the same scenario play out twice. And I think for me, that's what makes it so interesting is that I never stop learning.
Right, let's move into Surrey Hills. It is an exclusive part of Sydney, and it's also, people might not know this, it is the capital of mum and dad borrowing money out to their children. This is something that you have been a part of for some time.
Absolutely. Yes, it's full of yuppies and dinks. That's what we call it. So double income earners, the fresh blood rolling into the trends of what Surrey Hills offers and the convenience of it. But yes, a lot of first home buying activity in this market.
This is a fantastic story you were telling me off air. You had a client wanting to consult with a clairvoyant before they made their decision. Tell us about that one.
Oh my goodness. I am going to bang my head against the wall telling this story again. I had a client who We had a very, very specific brief for a warehouse property. I had sourced what I had felt had ticked more boxes than the brief that he had initially given me. After a 4-month search, which by the way is quite long for me, most properties I acquire within 6 weeks for a client, but this one took me 4 months. I'd found the perfect home in Surrey Hills. We had done 3 inspections, due diligence had ticked off. It was well within the client's budget. But the last call that needed to be made was to the client's clairvoyant to determine whether this was the right decision. Turns out that this was going to be the wrong decision, and the energy that this house had wasn't going to be fulfilling for my client's brief.
What happened next, Bianca, in this story of yours?
Without boring you with the frustration that I had, we actually ended up buying a more expensive property that was inferior to this home. And that was purely based on the fact that the energy that this property had and the feng shui of the home was going to put a dampener on this prospective purchaser's life. Something that I really can't argue against with facts. I can't show comparable data. I can't show a graph or any indication of where a market might be moving, any past sales. There is absolutely no way around a personal decision that is determined by somebody's clairvoyant.
Yeah, I would say that our standard deposit these days is probably more so 5% than it is 10%. So probably just a cash flow thing. I mean, if you're buying a house at $5 million or $4.5 million, 5%, you're talking $225,000, whereas 10%, you're talking $500,000. So most vendors that we're selling on behalf of are fairly comfortable for it to be a 5% deposit. And what we've also seen sort of stretch out a little bit more over the last few years is the settlement term as well. Your standard settlement term in days gone by was probably 6 weeks, which to a degree it still is these days. But what's becoming more common now are the 3 to 4 month settlements that are taking place as well.
Now, we're talking about the market starting to heat up from this moment in time right through until Christmas, perhaps into the new year as well. Are you expecting those terms, when you say, pushing those terms out further than 6 weeks? A lot of the transacting, it all comes down to who's got the best terms and the shortest time to transact.
Correct. I mean, our advice to our owners is always to put your preferred settlement period on the front page of the contract, whether that be 6 weeks, 3 months, 4 months. The way we approach the situation is, we're open to offers of any kind from all the parties, and we'll just take that to the vendor. But we find if we put our preferred settlement term on the front page of the contract, that's where we draw the line in the sand. And if anyone wants something different, well, again, we're all ears, but you kind of got to come to us with a good reason to take that to the owner to get them moving away from their preferred to your preferred settlement term.
And I want to talk also about, in your suburb, houses performing well in terms of sort of these knockdowns. They look at it and go, yep, this one we can knock down. Just how attractive is that in the suburb of Willoughby?
It's a huge thing. So there's what's called a conservation and a non-conservation zone. If you're in a non-conservation zone, it means that effectively you can buy that house and you can bulldoze it down and build a new house from scratch. If you're in a conservation area, it means that you have to keep the streetscape the same from the front. So you can't knock it down. You've got to keep it similar. Now, if you're in one of those non-conservation zones where you can effectively knock it down and rebuild, those blocks of land are selling anywhere between sort of 4 to 5.5 million, depending on the land size. The finished product being a brand new 4 or 5 bedroom home on, let's say, 550 square metres, which is your average block size in Willoughby. They're trading anywhere between 6.7, 6.8 and roughly 7.5 to 7.6 million. So there's certainly some good interest for those new homes, particularly we're finding from the Asian market.
We are your local source for unbiased, expert insights into the world of real estate. We are not a real estate company. Our only objective is to help you better understand the real estate market.
Yeah, the way we use social media, for instance, is a huge one that's changed.
Oh, Nicole, that is my favourite subject. Social media and the way that real estate agents, well, some use it, no shame, like no shame at all.
Self-promotion.
Self-promotion with no shame. That's it. Exactly right. I mean, that is a huge area that I suppose you kind of got to keep a lid on it too with your staff.
Well, you have to definitely have a culture and a mandate within the company that, really does track what you're putting out there, because you're looking after a brand after all. But at the end of the day, you can't sell a secret. Being able to, for us, we love to use client stories so that people understand why you would use us. So I think that sort of thing is really important. We like to put out there what we've bought for clients, but of course, keeping confidentiality is really important as well. So there is a balance between what you put out there and how you want to be seen as well. So there's, real balance is important, and shameless self-promotion, well, I'm going to leave that to the selling agents.
Yeah, shameless self-promotion. I mean, some people just don't give it a thought. They just turn the camera on and off they go. And because we're talking about social media and the fact that you have done 13 series on the block, so you're a bit of an old hand. You've seen everything when it comes to this sort of thing.
All these big numbers, Craig, it's actually aging me. But yes, I've done quite a few series of the block just to see even how that show's evolved over the time and the influence it's had, the impact it's had on the market. And, I think the show is there to be inspirational and aspirational to people. And we've seen a whole lot more people tackle a renovation or a design, in-home design for themselves. And it even changed the way people were buying. So your Targets and your, big chain stores were also changing the way they bought stock to be able to keep up with shows like The Block, which I think is a huge influence.
It's interesting because if you take out a couple of guys that have been buying all those properties on the block over so many years, it kind of makes you wonder just how embarrassing some of the list prices would have been. Am I out of line for saying that?
Oh, look, it's a difficult one because I think if we're talking about the two major buyers from the block, they were there, one very astute investor and another very, smart promoter of their own company to do so, factored all of that in when they were purchasing the properties at insane prices. So it did cut out for a very long time the mum and dad buyers that were there to really buy a home that they wanted to live in because they'd watched the show. They, a lot of the time too, buyers actually hadn't watched the show, which is surprising. And so when they found out it was actually a block property, it was, and that they got all the furniture, they were quite surprised. So I think that over the years, it's really changed. I think we might see less of that in this year's block. I don't think we'll have those two people bidding furiously, and it might come back to a more level playing field for both investors, which I know are a huge buyer proportion for the block, as well as, the people that actually want to live in these homes.
Yeah, and if you don't have those two buyers there, I think the pencil's got to be super sharp, doesn't it, on the list price? Maybe just a little more, because I sort of got the feeling, not that I've ever watched a series, but I've read these articles about these buyers. I sort of got the feeling that they were almost like a bit of an insurance policy.
I think you've hit it on the head. I think they were an insurance policy, for Channel 9, for the block producers. It really meant that they had some depth of buyers there just because of these two people. But I think that today's market really is so price sensitive. So whether it's the block or anything that's on the market, it needs to be razor sharp. It needs to be on point. It needs to factor in what you're selling, what the market around you is selling. The right buyers do come to those properties to buy them.
I have to say, I know very little about Tunisia.
Good morning. It's a country I knew very little about before we made the decision to come here. We are full-time travellers now. We aim to spend time in 6 to 10 countries a year. There are some restrictions around how long you can spend in certain areas, like the Schengen zone in Europe. So we were looking for a summer location. And Tunisia came up as an opportunity. We booked an excellent home that we're staying in for a few months. And we didn't know very much beforehand. We've learned so much being here around the history of this country, Carthage, ancient Rome, a lot of civilizations, and a really beautiful country right at the tip of North Africa. That's been a wonderful experience that we've been able to have here, and world schooling our daughter, which we do as part of the travel, for her to be able to go and walk amongst 2,500-year-old ruins and learn that way is, I think, so much better than what she would have been. And our experience is that most people, most countries are very, very welcoming of anyone who can come and be respectful, and that's why we want to go. We want to go and experience different cultures, different people, and to respect what we're there for rather than it perhaps being some of the ugly cliches of tourists around the world that people fear.
Now, we were talking about Kate, whose situation completely different to yours. Well, yes, she's doing the travel side, but she didn't get into home ownership. I just wonder, your friends who took off travelling didn't get into property ownership. Now you're in your 40s. What has some of the reaction been to you doing this travelling? And how long have you had your property? Almost 20 years or over 20 years, is it?
Well, yes, I bought my first unit at 21, so over 20 years ago now, 22 years ago that I bought that, and very much embraced the property ladder opportunity. Sold that, bought a house with my then girlfriend, the house we had when we were married, lived in that for several years, and were able to leverage that into a family home. So we had both those properties. And subsequently put that investment property through the life cycle, sold that to the next people and bought another investment property, continued to build our equity and wealth through property in that regard. When I was starting to do that, it was certainly not an easy thing to do in my early 20s to commit to a mortgage. I'd done the research, I'd done the planning. I was confident that I was buying the right property in the right area that was going to fit my criteria for being a property investor.
Coming back to Kate, you would have looked at her situation because she does say in the article, if somebody had said that she could have both, she would be so much better off. But she's finally, at 41, she's into the Sydney property market. I mean, 41 is not that old. Yes, if you're buying property at 21, it's double almost, but you do what you think is best. It's about creating the opportunity, and that is definitely exactly where you're at. Talk a little bit about the property in terms of what you bought. Read somewhere that it's risen by 276%, a gain of nearly $500,000.
I think that's the Brisbane unit market in the time since I bought in. What I really learned from that first experience and doing some minor renovations and selling that for a small profit was then a wonderful learning ground for the first house that we then bought with some land of our own. And that was a wonderful property investment success story. We negotiated well in buying that house, which was something that was perhaps a little easier to do in the mid-2000s. Put in the sweat equity. The three reasons I love property investment. It's the leverage. It's the fact that you can take on the debt, the other people's money, and to invest and gain off the back of that while inflation eats it away. It's the sweat equity that I can spend my weekends painting, building fences, adding value. Can't do that to BHP or Commonwealth Bank shares in the market. And then it's that personal edge you have of being able to do the research, buy the right property at the right time. We lived in that property for a few years, and then we started to travel to see the world, turned that into an investment property. With living there, we put something like $90,000 of our own cash into that house in Brisbane.
We connect you to the best real estate information across Australia. The Real Estate Podcast.